Good evening, option traders. This is Sam the Trader Geek with your Sunday night option review video. Hope you had a great weekend and um, ready for the new trading week. And here we go. We've got the trades up here, and after a really bad week capped off with it by a nice Friday, um, we got in a little better position with some of our trades, but some of them are a bit underwater. So let's go through them and see what's what. So here's ADI, top of the alphabet, having a nice bounce on Friday after really 5 ugly days, so to speak. And our put spread is down about 75%, although we are still, actually, this is just a straight put sale unless you did the put spread. So we're down about 75% on this. We have a couple of weeks till this expires, so we'll see what happens. We're $10 away from the short strike. We were a lot closer, but we did a nice recovery. We'll give this a little bit of time, and if we have some strength this week, this should recover pretty nicely along with any other semiconductors. ADM holding up well, though pulling in a bit on the last week or so. We are still up 198%. This is a play out in June. So not much to worry about. We've taken a couple of profit targets and we're still up on this. And if the staples trade, the lower risk, lower beta stuff is going to perform, then this one will hold up pretty well. It closed on the options implied expected move last week. APA coming close to our short strike. We held this through earnings, and we are actually we undercut the short strike on Friday and bounced right back up. But this is an April put. We are down about 100% on this, but not to worry. We're still early days in this process, and so if energy is going to garner any strength, then APA has good support here at 20, and if it doesn't, then we'll have to either roll out or close out of this one. Showing good relative strength on Friday was Bloom Energy, and closing at 24 after a dip, like a lot of stocks did on Friday. We're still up on this trade, given that we've taken a couple of profit targets, but we are a little bit down on our last tranche. We bought them for 90, they're at 50 cents. So gonna decide probably this week what to do with this one. It is a May play, but if we can't start getting moving back up, then it's a long time to hold the rest of these. If it's not going to start moving in our direction, it will just cost us premium, and I'd rather be in something that's moving rather than something is going to be going sideways for a while again. CVX is a put spread that expires in March. We are up about 88% on this. We are probably down to the last 15 cents. I'll likely close this week, if not roll it out to perhaps April to keep this going. I like CVX as a stock and as a choice in the energy sector. And honestly, selling a put was the right decision. Look at the sideways action. You can see it as far as is visible here, for instance, January 13, probably go back further, and it was at that same spot long ago. But this one's working out for us. And in the energy space, CVX is a pretty good choice. FXI pulling in a little bit last week with the Chinese stocks. We had rolled this out to the 32s in April. We took a couple profit targets on this one, given that we did this in March, and we also did this, I believe, in February or January. So low risk play, low reward as well, but slow and steady with this one. If the Chinese stocks are going to continue to perform, selling a put is a good strategy to get a slow drain and make a few dollars. miners and gold coming in last week. This is our June play. Didn't quite get to our next profit target on this peak here, but still holding in. But we do have till June on this, and if gold is going to show resilience, then this one will come back for us. We'll give this more time and not worry about it too much. We are above our cost basis. We bought this for 50 cents. It's still, we're at 192% profit on this, at least on the remaining portion of what we have. This other number is kind of our cumulative profit percentage based on the targets that we've already taken. GRAB, still stuck in a range. Our speculative play out to April, we bought it for 70 cents and we're down 77%. We looked like we were going to make some progress, but we have until April on this. It is a speculation. I'm willing to lose all the premium here, and right now it looks like that's where we're headed, but we've been here before, and gonna keep this on as a lotto for now, and I think grab can start moving if the market gets back into gear. An unfortunate one for us, and the timing was IBKR, and we did do a custom in June, so we have a lot of time. Looking for a spot, we're holding the 50-day, looking for a spot to perhaps add to this. I'd like to play, although if the market doesn't cooperate, this is not going to do well. But we have a stop all the way down at 190. I probably won't wait till we get there, but this one I still have confidence in, especially if we hold the 50-day like we are right now with a blue line here, and we can turn things around and head back up, but that's going to depend on the overall market. Intel, after getting up to about $28 or $27.50, we're back in the funk here, holding the 23 level. We don't want to break this dotted line, which is a chandelier stop. And if we break that, it means that we're heading back down again, probably to test the 50-day here at the $21 level. We've taken a few profit targets, and we are still above our original cost basis at $1.63, but we want to see this continue to, or at least resume going back up again. The trip above the 200-day was a bit short-lived, but 4 days barely, and back down again. So market pressure is not helping Intel here, as is the weakness in the semiconductor space with everything else in the market. J&J still looking really good, and after a brief pullback, tried to head back up, and these consumer staples plays have been resilient. In fact, consumer staples, healthcare, and utilities have been holding up fairly well, and these are the defensive plays. And you know, if I'm fishing for new trades, that's where I want to cast my line. And we can see here we've taken quite a few profit targets. Our next one is at 14, but if we can get up and back over this old high of about 166, then we could get to our next profit target. Hopefully you're participating, you still have some, but we should be down to runners at least on this one. So it's been a great play, and love to get repositioned in this one, since we are at the short strike for this particular call spread. Lyft, doing nothing wrong, going sideways, not really taking out the earnings low over here. So that's what we want to see. We're up a whopping 8.5%, but this is a June put that we sold for about 47 cents. So not bad, but definition of the slow trade. Now Meta, along with the Mag 7, coming down hard from the 740 high, and kind of ensnaring us in this. We have a March 650, 625 put spread. May take us down to the wire. We're holding the blue line here, the 50-day, which is good. Although, getting down to 640 is no fun when you have a 650, 625 put spread. So we are down about 100% on this, but a lot can happen between now and options expiration. And about 17 days from today, or 2 trading weeks, when options expiration for the quarter for March comes up. MRK holding up pretty well along with healthcare. Closed at the options implied expected move last week and just under the 50-day. I think we're headed for a test of the 50-day, which is what we want to see. We're still in great shape. We're up 229% on this. So we want to get our next profit target. It's aggressively priced at about 8.25. But if we get a nice big update that takes us up to the 50-day, we might get close to that price. But MRK looking good again in the healthcare space, which is strong. Now Netflix, we are back down to the long strike of our call spread, and in the Netflix world where option premiums are jacked, this can hold up very well into expiration. We've taken 3 profit targets, and we are at about 958 for this spread, at least at this point. We paid what did we pay for this? Why am I not seeing this? $9. So we're still a little bit profitable, but I'll keep an eye on this one. If the market keeps going up or continues its bounce, which I think it will this week, we should see this return it back into a good profit zone. But keeping in mind that 989, because of the price of our call spread, is the break-even point for our call spreads to close in the money, since it's a 981,000 call spread and we paid $9 for. NVIDIA, not having a great day the day after earnings. That was Thursday, which was pretty much an ugly day for most of the market. And now looking like it was going to head further down, but had a nice bounce Friday along with everything else, and closing at around the 125 level. If we take a look at our short puts, and I considered on that bounce on Friday to roll, not our puts, our calls, the 140 calls, and let me see if I can, yeah, it's 137, 138. I got this compressed, so 140. So we're still at $2 for these calls, so it's a little bit premature to roll them out to April. At this point, we've got $2 of value there, so we'll keep holding on to this covered call that we have in NVIDIA. We're not up as much, but we're still positive on the overall trade that we started in December, and we continue to hold and selling premium month after month. This is kind of a test case for us to see how well a stock which is well supported like NVIDIA will hold up with covered calls. And make no mistake about this, if we were in a true short-term uptrend, which we are not, this covered call would have been deep in the money by now. And the fact that we're only up 0.81%, not a great return on our capital, but we also haven't lost money here. And if anybody did variations on the covered call, they might be even more profitable. Palantir is the next one. Had a nice bounce on Friday after undercutting Thursday's low, coming down to the 23.6% retracement. You see I have a Fibonacci retracement from the low to the high. So hopefully we don't retrace all the way up down to the 63 level. We have a Put spread in March to 80.65. We're still above the short strike. We're down 63% on this. And, sometimes when you're selling puts, you get a little bit caught up in a downdraft in the market, and that happens. But we have a couple weeks till this expires, and we're down 63%. But if the market holds up between now and expiration, this one should fare okay. We just need volatility to come in to help us as well. First time Palantir is under the 50-day in a long time, and I can tell you exactly when that was. I guess it was January 15th is when we finally hurdled the 50-day, went up all the way up to 125, when we're now back down to 85. So I guess we hit the 78.58 level on this on Friday. Qs, well, this one is probably a lost cause, and the best thing we can do with this is just leave it alone here. I'm not inclined to roll this one because of how far out of the money it is, and messing around with it could just cost us money. In fact, if we have until the 14th, which is about 12 days, calendar days from today, and if we just leave things alone, the chances are we will just keep the 45 cents. Our timing wasn't right. It would have been better to do a back ratio on the put side. That would have been a nice result. Let's see if I can make this wider. So we have in the Qs the 535, 545 call spread. So we sold two of the 535s and bought, or we sold one of the 535s, I'm sorry, and we bought one of the, we bought two of the 545s. So as it is right now, we're losing more money in the two 545s than we've lost in the one 535, but that will start adjusting itself, because if we look at the 535s, the delta is about a 13. So it's a 13% chance this would be in the money. And so more likely than not, this is going to expire worthless. I can't imagine that this is going to get into the money. We can see here, and well, we're looking at the wrong expiration. Sorry about that. March 14th. Here we go. So 535. That's better. That's a 9 delta. So 91% chance that this one will expire worthless. And our 545s are down to about 20 cents. So we just give this time. This will come back in our favor. We sold it for 45 cents. So if we wanted to buy this back right now, let me check the math on this thing, then we would so we'll just leave this one the way it is and let it kind of fade away as we get closer to expiration, since there's really no reason to move this at this point. SLV, let me bring this up back. Getting under the 28 level, if we look at here, so it has had a pretty big decline here from the top here, just like gold has, although it never really had the strength gold has. But we're at the 28 level. Our put is at the 26 level. We're down. We're still up overall on the trade, but we will just let this be. And where do I have my stop? At 23.75. So we're a good distance from the stop, and we're holding the 50-day. So I don't think this is going to get much weaker. We have the 200-day here at 28 level, and so our puts are pretty safe here. Now the SPY, if you hadn't caught this, around the close on Friday, we took our first profit target. What we have here is a call spread inflection, an inflection spread with call spread. And so we bought a 590, 600 call spread, and we sold a 505 put for 19 cents. And on the close on Friday, we were able to sell our first tranche of this for about $1.69. So $1.50 above what we paid for it. And it even went a little higher into the close. So taking our first profit target on is kind of making up for the QQQ trade where we're really not going to make any money on it. But here the SPY trade already paying us. And if you didn't take the profit target on Friday, no big deal. You should be able to do that first thing on Monday morning. When I started this video, or before I started this video, the market was up, or the futures market was up a little bit. Now they're down a little bit. So it's a Sunday night, thin night. Who knows? Traders might be watching the Oscars. Who knows? TLT, we have still a couple of plays. TLT very strong here, but we're coming up at resistance on the 200-day here, which is right around 98.73, 92.73. But we have the two plays being the April 86 puts short, and those are up 67% for us. And then we have the March 85.90 call spread. So we are close to max value on this particular call spread. So we're up about 150% on our premium of this. But we're going to try to keep this as long as possible, and as long as it's fully in the money, and try to get close to our full value. Until we get to the 21st of March, this is not likely to expand to 490 or 495. So if we can get 480 for our last piece of it, we'll just close this down and call it a nice trade and move on to the next one. Tesla, we took off a trade last week, and then we put on a new one on Thursday. So let me make sure I'm saying the right thing. Yeah. So, yep. And so this one is already up for us. Let me make sure yeah, it's worth about 650. It looks like the first profit target would have been hit on the close on Friday. So we'll take a look at this first thing tomorrow morning. We bought them for 3.25, and looks like they closed at about 650. Let me just double check that. Yeah, looks that way. If we look at Thinkorswim, 638. Oh, that's for buying it. Let's see if we're selling it. Yeah, 638. So we did hit the first profit target on Friday. And if you didn't take the first profit target, you should do that sometime on Monday, and kind of getting us back into gear after the losing last tranche of the last one. But we made really good money on the last Tesla trade, and our timing was pretty good on getting back into this one soon after we closed the other one. So a nice bounce off the 200-day, going up $11 on Friday. And then our last trade is Walmart. We have a short put on here, recovering a bit from the lows that we hit last Monday, and heading right back up. Walmart being somewhat of a staples trade, and a trade down for consumers if economic weakness is upon us. But we're up 15% on these. This is the April 90.75 put spread. We are at 98, so we're nowhere near the short strike, although we did get there on Monday at 92. We were pretty close. So another one of the slow trades that's working out, and we'll see what the next week brings for us in terms of these trades and other trades that might find their way to us. Still a very choppy environment. The short-term bias is for a bounce into next week. We have generally favorable seasonal conditions for the first half of March into triple witching expiration, which is on March 21st. But we have a lot of economic news coming our way this week, and some remaining earnings that we'll have to get through. But for the most part, we'll have to see if the bounce that started on Friday continues and we are able to see some bullishness out of the market and determine whether this was a first leg down with more to come, or just a kind of a pause in the rally. And there'll be lots of punctuation points in terms of economic reports and news and headlines to create all kinds of fun volatility during the week. In any case, thanks for watching. Hope you find this valuable, and I will talk to you tomorrow, Monday, in the room. Take care and have a good evening. Bye-bye.